I'm Aurora Davidson, President and CEO of Amerigo Resources. Thank you for taking the time to watch this video. This is my invitation for you to review our updated investor presentation, which is now available on our website. I will begin this video with a promise. Over the next few minutes, I will give you a better way to evaluate Amerigo, not just as a copper company, not just as a dividend payer, but as a copper investment designed to convert copper exposure into shareholder returns. That is the concept at the center of our new deck, and the name of the concept is total yield. Let me explain why that matters. Most investors understand dividend yield. It is visible, it is simple, it is a very easy way to screen and compare dividend-paying companies. But in Amerigo's case, dividend yield alone is an incomplete measure. It reflects the quarterly dividend, but it does not capture performance dividends. It does not capture share buybacks. And it does not reflect the full value created when capital is returned through multiple channels. In other words, the measuring stick of current dividend yield does not fully reflect how our capital return strategy is designed to move excess cash back to shareholders. So if there is one question I would ask investors to keep in mind as they go through our new presentation, it is this: how much capital is actually being returned to shareholders? That is a total yield question. And it is the right question for Amerigo's investors. Because our investment case is not based on complexity, it's based on clarity. The engine of our business, as you know, is Minera Valle Central, or MVC. MVC is Amerigo's copper concentrator in Chile, Amerigo's copper factory. MVC produces copper. Amerigo protects its debt-free balance sheet. And when excess cash is available, we return it to shareholders as quickly as possible. Now, let me draw an important distinction between Amerigo and other companies in the mining industry. In mining, many companies are evaluated on what they might build: a new project, a larger resource, a possible acquisition. Those are valid strategies, but they often require time, capital, permitting, construction, financing, and execution risk. Investors often buy these types of company as growth stocks and expect a return of capital in the future. Amerigo is different. We are not asking investors to fund large development programs before cash returns can be realized. MVC is operating today. It produces copper today. It generates cash today. And when conditions support it, shareholders participate in those returns. That is why the concept of total yield matters so much when evaluating Amerigo. It captures the outcome of what we are doing today, not just an intention for the future, not just the quarterly dividend, not just one component of return, the total value returned to shareholders. Here is another way to think about it, particularly for new investors to our story. The quarterly dividend is the foundation of the capital return strategy. It gives shareholders a regular return. The dividend is secured by a debt-free balance sheet that also contains a prudent cash balance. The performance dividend is the accelerator in the capital return strategy. It allows shareholders to participate more quickly when copper prices and operating performance generate excess cash. And share buybacks, well, they are the third tool that we use in the capital return strategy. Buybacks allow us to return capital when we believe repurchasing shares is an attractive use of funds. And as you know, at a minimum, buybacks offset shareholder dilution, but more broadly, they increase each shareholder's proportional ownership in the business. Each tool has a purpose, but the real value is seen when they are all viewed together. That is what the total yield concept is intended to show. It is not a new concept, but it is a better lens through which to view Amerigo as an investment. And in investing, the lens matters. The wider, the better. Looking only at the quarterly dividend is like using a telephoto lens. The image is clear, but the field of view is narrow. Looking at total yield is like switching to a wide-angle lens. Now you can see the entire return profile, not just one component of it. Investors can see how much cash has already come back to shareholders and how powerful the potential is for future returns of capital. By using total yield, investors can see how Amerigo's disciplined capital allocation has generated a superlative outcome for investors and understand why Amerigo should not be evaluated by conventional industry metrics. This brings me to an important point. Amerigo is not like many other mining companies. We are not a high-growth development story. We are not a highly levered copper vehicle. We are a focused copper producer with a disciplined capital return model. Our focus on exceptional operational performance from a world-class asset is intentional. It keeps our business understandable to investors and our capital allocation disciplined. The outcome of this operational excellence then keeps management and the board accountable to a simple test. When the business generates excess cash, does that cash come back to shareholders? That is a test. And total yield is how investors can measure the answer. Of course, copper prices remain central to Amerigo's overall success. Over 20 years ago, the original investment was made in MVC with a positive outlook on future copper prices. That outlook was correct then, and long-term copper fundamentals remain constructive. The world needs more copper for electrification, energy infrastructure, transportation, technology, and industrial growth. At the same time, copper producers face real challenges bringing new supply online. Projects take longer, capital costs are higher, execution risk is greater. Existing mines also face declining grades and increasing complexity. That creates a supportive long-term price environment for copper producers. But the message of this new deck is not simply that copper prices may rise. Many companies can offer copper exposure. The more important question is, what happens to that copper exposure? At Amerigo, the answer is clear. Copper is the opportunity. MVC is the operating platform. The capital return strategy is the mechanism, and total yield is the measurement investors should use to evaluate the opportunity accurately. That is the framework of our new investor deck. Now, I want to mention risk for a moment. This is not a risk-free business. Copper prices move, costs move, operations require discipline, weather and operating conditions can affect production. But that is the strength of having many tools in the capital return strategy. We do not promise excess capital returns when excess cash is not there. Performance dividends by design depend on the cash generated by the business. That is part of our overall discipline. We return capital as quickly as possible when the business supports it, and preserve financial strength when conditions require it. The objective of our capital return strategy is not to maximize one payment in one quarter. The objective is to maintain a durable model that can operate through cycles and return capital over time. That is why total yield is the better way to understand potential Amerigo shareholder outcomes. So, as you review the deck, I encourage you to use 3 questions. First, how does MBC generate cash? Second, how does Amerigo protect the business and the balance sheet? Third, how much excess capital is returned to shareholders? Those 3 questions will take you through the heart of the presentation and also through the heart of Amerigo's strategy. We operate a reliable copper business, we maintain financial discipline, and we return excess capital when the business generates it. That is our story. If I could leave investors with one thought, it would be this. Amerigo should not be evaluated by quarterly dividend alone. It should be evaluated by the total capital returned to shareholders. That is total yield. Thank you for your interest in Amerigo. I hope this presentation gives you a clear and useful way to understand our business, our strategy, and our shareholder return profile.